what is the implication of Ethereum perhaps becoming arguably more centralized? Um, I think for me, the bigger problem. I mean, of course, countries and their impact on the price of Bitcoin, for example, or Ethereum, is a big consideration. But for me, the bigger one is really, are we inadvertently taking away like power from the people, right, and from like the whole like the masses, right, and like taking away the whole point of what blockchain is supposed to be, like blockchain technology or what crypto is supposed to be, and giving it to a few people that have a lot of means.
Hello, everyone, and welcome to another edition of Okcoin Live here with Alex, Davica, and Harrison. The listings teams is back. We didn't wrap this time, but we're going to wrap again soon for you. How about Harrison? Let's talk about your recent blog post.
It's
You
not
you
posted
wrote about
yet.
the oh, you're gonna post it. Let's give a preview of the recent blog post because it's actually a very interesting. Uh, you talk about. I'll let you spill the beans. You talk about the ETH merge, but there's some cool analysis you've done to the stock market PMI and so on. Can you talk a little bit about that?
Yeah, sure. So, uh, there's kind of always been in my mind. I've always been curious about how much of ETH and crypto more broadly, how much of the performance has been driven by the U.S. economy, the sheer amount of trillions of dollars that have been put into the economy by the Federal Reserve and the federal government. So I took a deeper look into maybe if there is any correlation amongst those two things, and it seems like it's pretty high. So the US PMI index is Purchasing Managers Index, kind of gives you a feel for what's going on in the manufacturing sector, how much um, demand there are for goods in the US. And as that rises, crypto prices have risen almost in lockstep. And every bear market cycle has been driven by a fall in PMI of more than 10%. 10 to 15% is kind of the sweet spot for it. We've seen the US PMI index fall. It peaked in November 2021, which is the same time Bitcoin and Ethereum peaked. And since then, it's fallen about 15%. So we're seeing basically the same thing that's happened in 2015, in 2020, and also in late 2017 happen. So we're looking right now. The post kind of summarizes with we're looking for PMI to bottom out before crypto prices can resume their uptrend. Um, Assuming that everyone's still interested in the technology, which I think is definitely true. This this should the U.S. economy should kind of dictate what happens next in crypto prices more so than some of these narratives that we've seen come out, especially like the ETH merge, um, which I think will be good in the long term, but may not drive the price upwards as much in the short term as a lot of investors are positioning for today. So yeah,
Can
that's a
you
general summary. I don't. Is there other things you were thinking about, Alex? You wanted me to?
well, yeah. So can you talk a little bit? So this is interesting. So I know we typically talk about crypto, but there is a lot to be said for all the crypto investors out there, right? I think many serious crypto investors have been focusing on the macro and the macro environment being what the Fed is doing, the U.S. Fed specifically, what other central banks are doing. Very few people know or understand PMI, right? So I don't know if I'm putting you on the spot here, but can you talk a little bit about when it peaked, what were the numbers more or less? When it's bottoming out, what are the numbers, and what are you looking for in terms of bottoming out? Like, are we talking about 40s? Well, actually, I'm kind of stealing your thunder here. Talk to us a little about the range a little bit, and then when it's gonna start coming back up. You think?
Yeah, so I'm not an expert in the PMI index, but I do know it's basically like a summary of purchasing managers. That's what it stands for, Purchasing Managers Index. So those are the people that are going and sourcing the goods um, to create them or manufacture the goods that the U.S. economy needs to operate. And so it's a survey done on I think it's a monthly basis. Um, any number over 50 means that the demand for goods it's like bullish, and then anything below 50 is somewhat bearish, like demand is slowing. And so we've seen. So I guess I'll go to the most recent cycle. Um, in in between October and November of 2021, this number peaked at 65, and since then it's fallen to below 50. That was at the end of June. It was around 48. So that's a 18% fall in the PMI index. We saw similar falls in during the crypto winter 2.0. So in 2019, early 2019, that the PMI index bottomed out around 45, 46. And then it bottomed out in the first crypto winter around 44, and that was in late 2015. So in each of those scenarios, we saw a number between 44 and 46, and right now we're at 48, I believe, so or 49. So we have a little bit of ways to go, I think, before that number bottoms out and it turns into a hopefully another bear market. There's no guarantee that that happens, obviously, but that's what I am looking for as a personal, like from a personal standpoint. So
Yeah, I wonder if we can show a chart here, but yeah, the PMI is definitely is interesting. It's interesting to see like it really like even if we look back, I'm looking at the chart 2000, right? .com, it was about 55 to 60 in November. This past November, let's see what this was. Actually, it looks like it's about 20 something. In the chart I'm looking, it went all the way up to 65. And yeah, it's now falling, or I think it was a 50, as if you said 48. So once it goes down below 50, it's pretty bad. But looking at this index, this is very important. I think the other thing is very important is the money supply, M2. So there's M1, M2, M3 money supply. When the government or governments print money, there's more out there. And then you look at the money supply. And the second part of it is you look at velocity of money. So if velocity is falling, if there's money supply is increasing and velocity is increasing, you get inflation. People basically are using this money a lot. If money supply is going up and velocity is going down, then typically that's an inflation of capital assets. So real estate, crypto, stocks, which is what we've been seeing in since coronavirus. People are basically getting money and then they're not spending it on goods, they're holding it, hoarding it, or investing it. And so that's very important to look at the velocity, right? To see if velocity is going to increase or decrease along with the money supply and then PMI. So that's probably one good way of looking at to see what happens. And the other one I like to look at is there's GBTC, which is a Grayscale Bitcoin Trust. And there are other products out there now, but I like to look at their premium or discount to NAV, which is net asset value. That to me is a proxy for Wall Street's attitude towards crypto. So if the discount is deep, which it is now, Wall Street is not getting in. If these discounts starts narrowing, there's more investment. There's Wall Street investor sentiment that's starting to come up, not just regular retail.
yeah, and that's really interesting to look at too, because that kind of correlates exactly with the Bitcoin price too. Like we saw in late 2021, the discount for GBTC to Bitcoin's price was around 12%. That's dropped all the way to 32%. So there's a lot of either shorting or selling going on of the from the institutional accounts.
So, I guess if you're taking a step back or thinking about, what does this mean for the retail client, and for people who might be watching this today and, hearing all about this, what would be, not, this is not financial advice, but what would be your outlook on the market going into the next few months, and what would you personally do with the crypto assets that you're holding?
So
Yeah.
yeah, I can go first. So I've been kind of taking bull run or not bull runs, upward price trends as an opportunity to take down some of my exposure because I do think that we're in a downward trend. We're continuing to see the US PMI and just the overall economy slow down. So until that stops, which I may be late to the party on like the new bull market, but if that doesn't stop, I'm not going to be allocating significant dollars to the crypto space because I see a lot of headwinds in terms of just overall GDP growth, especially in the US and overseas and in Europe. And then interest rates continuing to increase too, that increases discount rates and that lowers the expected future cash flows of any business and also Ethereum as there are cash flows from it. So that's kind of how I'm thinking about it.
Yeah, I'll answer quickly, but I want to go back to what you talked about. You said cash flows from Ethereum. Maybe I'll go, David. You go. Let's come back to the cash flows from Ethereum because that's very interesting. No one in crypto has cash flows, and now you're actually attributing it to one of the major ones. So let's talk about that and real yield, which is a nice term in the market now. I'm hodling. I've taken some time to decrease my exposure. I sold some Bitcoin at 48, which turned out to be prescient. I wish I could have jumped in. Instead, I needed the cash to kind of, to hold me out throughout this process to have some liquidity on the side because I'm margined in crypto and stocks lightly, but still I'm on margin. So I need to be able to have some cash, set aside in case I get margin called. The Harrison's laughing. I'm only 10% margin, and even that, guys, just be very very careful with margin. I When I was doing my modeling, I kind of planned for the worst case scenario, thinking that the worst case is not going to come. Sure as heck, it's here. We definitely have the worst case scenario that I ever thought and was going to happen. It's painful for everyone out there. You look at these YouTubers and even Raul Paul and others who are fairly Tom Lee who are fairly bullish in the market. And everybody's like, yeah, it's falling. Or others are like, this is great. I sold everything at the top. I'm waiting for discounts. It's kind of bullshit because, like, I'm sure some people sold at the top, but it's rubbing it in a little bit. For those of you who are feeling pain, we empathize. I mean, it's painful. It's painful for everyone. Uh, Hold tight. I mean, I'm holding tight. I'm not really trading. I'm not allocating in. Although, frankly, the $20,000 Bitcoin was, had I had more cash, would be something that I would buy. Not investment advice. Not suggesting to do anything. For me personally, I'm very okay with those Bitcoin at those levels. In fact, very happy with Bitcoin at those levels, but I'm just kind of holding. What about you, David? What are you doing?
Yeah, I'm kind of in line more with Alex in terms of my strategy. I only put in, a percentage of my cash flow, like capital. So it wasn't necessarily, I didn't kind of go all in in the crypto market. So I don't feel like I personally needed to pull my money out when the market started falling. So although, looking at my portfolio every day does hurt, and it is one third of what it was, at this point for me, I think, especially for the alts, right? The non-Ethereum, non-Bitcoin tokens that I have in my portfolio, I think it doesn't make any sense for me to try to sell now if I don't necessarily have to. So at this point, it kind of feels like for me a little bit too late to take any kind of like action in terms of like reducing my exposure or selling. So I'm just holding. I think I might put in some call. I mean, I might put in some alerts for some of the more smaller alt tokens that I have. Just maybe even like other layer ones that are not the top two or three, where I'm not really sure where they're going to go once the market picks back up. And actually, this would be a great segue to talk about like what we think about other layer ones and other layer twos, because I'm not really I am not really sure how long this kind of like model of multiple layer ones and like interoperability will continue. And I'm curious to know what your perspectives are on this.
Harrison, why don't you go? I mean, we can talk about this, and real yield is part of Ethereum as a layer one versus others.
Yeah. I do want to comment on my me smiling to your leverage discussion. I just was I thought you would give your disclaimer immediately after talking about leverage because I know you're very open about it and communicate clearly. Like, don't use leverage. So yeah, I'm also anti-leverage, but I guess Davica, to your questions about layer ones and layer twos, I think there is a lot to be excited about in the crypto space. If it's it's not prices today, it's actually like technology, and um, there are a couple cool layer ones coming out. Aptos, it's the former Facebook DM team. They spun out. They've also hired some people from Solana. So like the head marketing officer works there. They're calling it Solana 2.0. So hopefully Solana without the blockchain stoppages. It's supposed to be the fastest chain for DeFi, really low fees. So we'll see when that launches. It should be end of September, early October. And then Sui is also, if I remember correctly, some Facebook engineers, meta engineers that have come out. So that's people are excited about that just because of the caliber of the team. And then layer twos, maybe I'll leave that discussion up to you guys. I know Davica has had some conversations with Metis and Optimism. So
Yeah, I think I'm actually very curious to see what happens with the layer twos once Ethereum moves to the proof of stake, post merge in the next, hopefully in the next 10 days. Um, I'm, I think that even post merge, I think there will be a space for layer twos. I do still think that Ethereum will continue to be the most, used, the most major like layer one in the space. Despite the more exciting kind of projects coming out, some of the ones that Harrison mentioned, other ones that we've looked at, including Zill or even Starkware, Starknet. So I think that some of the layer twos, I'm quite excited about Metis. I think they're a strong team, and I think they're going to continue kind of innovating and seeing what the market needs and what the Ethereum community needs. So yeah, for me, I almost feel like I'm more bullish on the layer twos than I am on more layer ones.
Yeah, I think unless it's a truly revolutionary layer one, which let's face it, probably 99.99% of the people in the space will have no idea whether layer one is revolutionary or not. Like, I mean, diving in and understanding blockchain consensus, which is really where the revolutionary things happen, is very hard. I I'm very curious as to what to think about this whole Bitcoin merge. By the way, as an aside, I do love this. We should actually do this more often, just on private team calls. We're just kind of recording this as is for the folks out there, and this is the listings team, and we should have more of these
For
conversations.
the five folks who
Um,
watch this out there,
for the, yeah, for the,
your
for the
mom,
folks
my
out there.
mom.
Yeah. Oh, mama. Hi, mama. I'm famous. Uh, hi, Harrison's mom. Hi, David's mom. Hi, everyone's mom. Uh, it- I'm personally against. I mean, there's a little bit of dogmatism, dogmatism.
Dogmatism.
What's the right way? Dogmatism. Um, I'm personally a little bit against the whole Ethereum going to the proof of stake model. I do think it becomes more centralized. I do think there are serious issues with it. Code becomes more complicated than proof of work, and so on and so forth. And I do believe on the Bitcoin side, proof of work in the right levels actually incentivizes renewable electricity versus not. We'll have a conversation about that at a different episode. I wonder what will people's opinions be, right? Ethereum goes to proof of stake. It becomes, on one hand, it becomes faster and more energy efficient. On the other, folks at Coinbase, and it's openly talked about in the Ethereum developer community too, can be subpoenaed, or pressured by the U.S. government to to kind of censor, like Tornado Cash, right? Tornado Cash is a prime example, to censor different transactions. Wouldn't that actually make a bull case for Bitcoin? In game theory, it says it will. It'll make a bull case of Bitcoin because Bitcoin will be the only one that's truly government and entity resistant, if you will. Not to say that we're anarchists. We're not against the government. We're not against the U.S. government, but any government in the world can become a bad actor. We believe that North Korea is a bad actor. North Koreans believe the U.S. is a bad actor, and so on and so forth. The point is that Bitcoin is the only one that can withstand any government attack on it because it's proof of work, and only because it's proof of work, and the way Bitcoin is designed to small block sizes, right?
yeah,
Uh, just one more kind of point, but will the market care, right? Will Wall Street and the money that's coming in, sovereign money that's going to come in, will they actually care? Do they want that, or do they want Ethereum? And I think sovereign money will actually want Bitcoin. And this will become a bigger case of Bitcoin. So Ethereum can overtake it in the near term as developers come in, but sovereigns and pensions are going to want Bitcoin, I think. You're not going to want something where the government can pressure two or three entities in the US especially, to be able to censor those transactions.
Yeah. I mean, I guess my first response to that though is why can't both of them operate? Like, I
They
think that
can.
I think that this like benefits the store value argument for Bitcoin for sure. It benefits the censorship resistance argument for Bitcoin, but until I don't think there ever will be a true way to build smart contracts, build dApps on Bitcoin. I know that stacks exist and that's a great alternative, but it's not truly like building on the Bitcoin blockchain, right? It's there's only a hash that goes back to it. So I think that there's just like two different schools of thought here, right?
Yeah. Yeah. Devika, what do you think?
I do, I think it's something that I maybe hadn't necessarily thought about, which is the point about, what is the implication of Ethereum perhaps becoming arguably more centralized. Um, I think for me, the bigger problem, I mean, of course, countries and their impact on the price of Bitcoin, for example, or Ethereum is a big consideration. But for me, the bigger one is really, are we inadvertently taking away like power from the people, right? And from like the whole, like the masses, right? And like taking away the whole point of what blockchain is supposed to be, like blockchain technology or what crypto is supposed to be, and giving it to a few people that have a lot of means. And the reason I say this is, we've discussed this as a team, but we do see now that the crypto landscape has a lot of institutional funding. So, there's crypto like mining companies coming up that have like VC funding, for example, right? Or private equity funding, or, all these projects that are coming out that have, 50 million, $100 million of funding, which is great. And I think the ecosystem needs that. My only concern is when we move Ethereum, which is, the kind of kingpin of the crypto ecosystem right now, to proof of stake, does that create a white space for these very large institutional investors to come in, start kind of essentially mining it, right? And like pushing out everybody else who's actually making true gains, right? And creating like salaries and like having money and like having passive income out of Bitcoin, right? And Ethereum. And that was kind of the whole initial point in the ethos of the space. So uh, it's really interesting that you brought it up. And I honestly hadn't really thought about it. Um, but I do see the downsides. I think to Harrison's point though, I think Ethereum does have a lot of problems with its current technology, and something had to change if Ethereum wanted to stay Ethereum, right? The alternative was you keep Ethereum as proof of work, and eventually like everything splits off into multiple different layer ones, and then we have these interoperability solutions, or one other layer one becomes like the layer one to rule them on. So I don't think that status quo was the solution. I'm just not sure if like the merge is the solution, but I know that the status quo wasn't the solution.
Well, what is this real yield that happens on Ethereum now? And you said, Harrison, you said Ethereum brings cash flows. How so?
Through the transaction fees. That's effectively like the blockchain's revenue.
But
And
we have had that now, right?
yeah, there's no change from that. Um, but the discount rate I was talking about, it's more so like this is like a banking uh, thing, I guess. It's like very finance-y, but like cash flow modeling. So like Ethereum, the reason that its valuation is so high is because people are assigning larger and larger cash flows like on a exponential growth trend out into the future, 10 years or something like that, let's say. And then they discount those cash flows back to the present using a internal rate of return or a discount rate. And as interest rates increase, this discount rate increases. So the divisor becomes larger, the cash flows become less, and the valuation for Ethereum thus also becomes lower, if that makes sense. So basically, like as interest rates rise, tech investments in particular that have these huge growth trajectories or expected growth trajectories get hurt the most. So that's why we've seen the tech sector fall massively, and now we're seeing crypto kind of fall in lockstep with tech.
It's interesting. Raul Paul keeps on talking about this, how Ethereum is going to be the first crypto's first risk-free rate, essentially, or crypto's first proxy for a risk-free rate. So for those, we're
Which
going deep
sorry,
into
which rate? Like the rate of
risk-free.
stakers? Yeah, but what rate are you talking about?
The Ethereum yield essentially that you
Ah,
can get, the rate for stakers. Yeah. So he's basically saying, hey, it's big enough, it's not going to fail. So you could just put your money away when proof of stake, get dividend or get some yield in Ethereum. That's risk free. Now it's an interesting way of thinking about the market. Definitely an innovative thought about taking the old capital asset pricing model for those finance geeks out there like us, and applying it to crypto, which doesn't have cash flows. I'm not sure I agree with him actually, because Ethereum carries with it risk. Ethereum can go away. Like if this was Bitcoin, I would buy it, but because it's Ethereum, Ethereum can theoretically go away. It's not risk free. It just feels like a sovereign, like the risk-free rate in the world is the US Treasury, 3 month Treasury, which is whatever percent it is. I don't remember what it is now. That's considered risk-free because the US government isn't going away. You can always get the money back, blah, 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 blah.
2.8.
Ethereum could go away. What?
2.88%.
That's huge. It used to be like point oh 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 oh.
Yeah, it was 0.05
Yeah.
last. Wow.
Yeah. So the 2.8 was at 275 basis points that they've been increasing. I just don't remember exactly where we were, whether close to 3. But anyway, the point is that Ethereum carries more risk with it, because Ethereum theoretically could be surpassed by Cadena or by Avalanche or by Solana, and so it's just about developers where they're building. But it is an interesting way of looking at saying, hey, let's take an asset that's likely going to be here in perpetuity. Let's take their, because Ethereum is proof of stake and you cannot do the same thing in proof of work Bitcoin, let's take their staking rewards and use that as a risk free rate. You know,
yeah.
uh, so
But
interesting perspective here.
yeah. The only thing with that though is the Bitcoin rate's kind of set in stone forever, whereas the ETH rate is depends on the number of validators and then the transaction activity on the network.
Exactly, there are moving parts for there for sure, right? So it's not. And again, they can, just in a macro perspective, someone can become a better Ethereum. It's going to be virtually impossible to become a better Bitcoin for what it does and what it is.
Yeah.
I mean, look, we'll see. It's exciting times for sure.
Yeah.
Is it impossible or would it just take time?
To do what?
Become another Bitcoin.
You would have to, let's say, fork Bitcoin, right? And then get all the miners to move their hash rate over and get all the people to adopt it. So sell the old, buy the new. You're talking about taking down a $600 billion market cap project, which is, it's kind of hard. You have to convince a whole lot of independent people. That's the beauty and the resiliency of Bitcoin, right? Nodes have to come over, miners have to come over, and investors have to come over. That's a lot of people you have
Yeah.
to come in to bring over.
It's crazy how for how short Bitcoin's been around, how much tradition and like legacy is instilled in the way they think. At least
Such a boomer crypto. Such a boomer crypto.
in,
By the way, as a complete aside, guys, so I was thinking about the other day, and I meant to tell you guys. So remember how we went to the 2017 cycle, and ICO, there were ICOs, they crashed, and everybody's waiting for the same thing. They're not, crypto is not, hasn't hit a floor yet because we haven't seen the same thing that happened in 2017. I actually think it's wrong because what was the, if you would say, hey, 2017 were ICOs, that was the madness, right? What's the madness of 2021 of this cycle?
well, NFTs. What's that?
NFTs
Yeah,
Definitely.
and gaming,
and
NFT
gaming.
in particular. Yeah, I mean, it all started with
Open,
DeFi summer, really, though, in 2020. I would say.
yeah. Well, look at OpenSea's. OpenSea's volumes fell by 99%.
Yeah,
That's NFTs. So the rug got pulled hard on NFTs. Now, look, the next generation of NFTs will probably be better. Hey, when we're listing things, we should be looking at innovative NFT companies, by the way, But this is, I'm kind of thinking out loud here and recording. So whoever is watching this, you're actually literally getting some alpha as we're talking about, from a team perspective. But guys, I've always talked about this as a parallel to say in 2017 this happened. Today, the same thing is kind of gonna happen. I think 2017 or ICOs were proved the use case for Ethereum. This summer is NFTs actually also proving the use case for Ethereum in a large way. But I bet you all this thing's going to die down, and we'll get real use case NFTs. So NFTs that aren't just our projects, but maybe a real estate or tied to something else that have resiliency going forward, right? And that's going to be quite interesting. I think we're going to get this next Uniswap from this upcoming year.
Yeah, I mean, Harrison and I had a session, recorded session with the CMO of Chain. And we actually talked about this pretty in depth because, Alex, I'm not sure if you saw this, but Chain actually, they have this, NFT as a service side of their project, where they work with these traditional Web2 companies to help them create NFT projects or help them launch their NFT um, collection. So they actually worked with Tiffany's and they created an NFT collection for Tiffany's, which is, I think, pretty revolutionary in the sense of it's the first kind of NFT collection by such a large kind of jewelry company, like such a large player in the international market. But, what was more interesting for me coming out of that conversation was, kind of in line with what you're saying, right? Which is, what is the next use case that a company like Chain, for example, can really help company like traditional companies do, or like even governments do. So an example that Harrison talked about was having your driving license as an NFT, right? Or like your car number plate as an NFT, right? So things that are just documentations and documents that need like ownership proof, right? It's Alex, you and I used to talk about like what is the value of something similar, right? An NFT in the law space. So how can we use that in contracts? So I'm
Yeah.
very excited to see things that are going to happen that use that technology in spaces that need that kind of like proof of ownership, proof of like edits, proof of all of that in a way that feels more secure than even the current solutions, right? Like I think Google, for example, is a great solution for documents, right? Like Google Sheets, you can track history, etc. But if you could make it more secure, more decentralized, create like a more global solution that isn't run by one company, like I think that's where I really see the magic of NFTs coming out in the next few years.
Yeah, that's a great anecdote, Dave. And something that's kind of it's like a lesser followed theme. I think something that's kind of percolating in the market is DeFi for NFTs. So there's
Hmm.
a couple places for lending and borrowing. It's JPEG is one of them, and then pseudo AMM, which has the ticker XMON. These are like just for your traditional JPEGs today, borrowing and lending on them. But I think eventually this becomes hard assets like real estate or
Hmm.
vehicles or businesses that goes onto the blockchain where you can get financing and you don't have to use a bank. You don't have to have a middleman for like buying a house, which
I love that.
there's a ton of alpha there, I think, for whoever does figure that out because I've been looking into buying a house recently and having to pay 3% fees to the buyer's agent is like ridiculous. For them to do what? Like I can go on Zillow and find this house myself. I don't need someone to facilitate the transaction.
Yeah, I mean, in New York, even just the rental market, the New York rental market, the prices are crazy. You guys know that I just signed my lease again, and how crazy the prices were. But even then, if you look at Reddit, for example, there's this whole chain on Reddit about there's a movement to actually start capping brokers' fees because brokers are now, because the market is hot, brokers are really like, some of them are trying to like, take you for all your worth. So they're saying you have to give me 4 months rent up front for, an apartment. So the prices are already super high. And then on top of that, giving 4 months rent, and people are saying, why do I even need to do this? Like, why am I paying someone, like for my apartment, for example, if I were to come and try to find it now, I could find it online. I could walk in, but if I happen to like, need a broker because the building needs a broker, then I'd be paying 4 months of rent for just that person to like open the door of an apartment and show it to me.
Yeah, which is just ridiculous.
Yeah. and yeah, there shouldn't be a need to like try to cap, brokers fees. Like it just shouldn't exist really.
You guys are funny. What was the company we looked at as part of the Bitcoin Odyssey? They were building on stacks. It was the multi-trade NFT. So it was like, hey, I have like 5 or 6 NFTs, and I assign them the value and the minimum I want to get from them. And then you go
NeoSwap.
into a room and what?
NeoSwap is the name of the
Yeah,
company.
NeoSwap. That was really cool. It was a really cool company. And basically, you can have 20 up to 20 people in a room. You swap a whole bunch of NFTs. Like you want to swap five, and the algorithm sets you. And like you basically do this. You assign value to your NFTs. You see what everyone else has, and you're like, I want this one, this one, this one, this one, and I value them at X. And then the system automatically says your five are traded for these five with a little bit of cash or stacks or whatnot. And it creates kind of winnable trades among many people. So it actually creates a more fungible, ironically, it's creating a fungible market for non-fungible tokens,
Yeah.
which is, the irony doesn't escape me, but it's actually a good problem to solve.
Would you put your gold chains, your house in there, your Picasso in there? Sorry, Alex.
Yeah,
I'm talking too much about your asset portfolio. My bad.
my Picassos, my real Picasso. Um,
That would be
Alex, know where you live.
my fake Picasso that's in the wall. I'm moving, so you don't know where I look. Look, my walls are now barren. Look at this, barren walls, literally barren walls. I'm two days left in this place. Um, so I think people would. I think we're gonna get there. It's just going to take some time to evolve. Like we don't know how fast or how far this is going to evolve. But NFTs also solve a fundamental problem within gaming. You can have
Yeah.
when we talk about the metaverse, you need NFTs because identity in the metaverse, digital art, digital anything, those are going to be quite interesting. The question is which chain are they going to use, right? To mint NFTs. Last cycle, everyone's minting on every chain and just going crazy because anything you mint would go up X amount of dollars and you felt rich. I think this time it's going to be a lot more careful, and then it's like, what are the NFTs doing? What are they solving, and how are they solving the problems?
yeah. Yeah, this is the another example. I used this in the chain episode too, but in Utah, the county commissioner, she's put marriage licenses on the blockchain, so you don't have to go down to the county courthouse and like get your marriage signed off by the judge. You can just do it on the Ethereum blockchain, which I thought was really cool. And you can save money too. I mean, you still have to pay gas fees, but um, that's a real use case for NFTs, right?
For sure, for sure. Guys, should we do okay, not okay?
Yeah, let's do it.
Let's do it.
I know, kind of abrupt change of topic, but NFT collections.
Not okay.
Wow,
One NFT only.
digital assets, or sorry, physical
Not okay.
digital assets. Not okay.
Crypto tokens, not okay. What are we doing here?
Wait, I have
It's
one. I have one. Getting back to political topics, is it okay or not okay to take your Ukraine flag off your profile picture?
Uh, that's not coming off until either I can laser eye that flag. So actually, it's not coming off. Let Russia end the war, and then I'll take off that profile picture.
so that's a not okay.
That's not okay to take it off. Okay to leave it on.
Nice.
Slava Ukraine. So it's just
I
gonna add.
I've been seeing people like take theirs down or like take their flags off their front porches, and it's basically completely because the media stopped talking about it.
Yeah, it's like it's in Europe actually. I have Czech friends here, and their parents came from Czech Republic, and I was talking to their parents in Russian, incidentally, and they were like, "Yeah, people are getting tired. They're worried about the winter. They're worried about putting clothes on." That's the Czech Republic, let alone Germany. So this is going to be an interesting time. I think it's just a waiting game. But yeah, that thing is staying on. So
Uh,
holding strong, huddling.
Huddling. I wrote my undergrad essay about the media, and I won't tell you guys too much about this because one day I'm gonna have a side hustle where I make money reading undergrad kids' college applications. But it's a very lucrative business. And I needed to pay rent. Uh, Alex, pay me more. But
Yes, ma'am.
the whole point was, it talks about how like the media like makes the big thing about something, and it might be a real issue like Ukraine, or it might be like something sensational, like what did Angelina Jolie wear to the premiere, and everybody talks about it for like a week, a month max, and then it's just people don't want to hear about the same thing again and again, and so they stop talking about it, despite the fact that it continues on.
You could see it even in CNN's pages. Before, it would just the front page of CNN would be dominated by Ukraine, and now you go. Let's see, like CNN. I'm going to CNN. Video shows fake Trump. It's all about Trump. Police too early to tell. Americans may need yearly shots to protect against COVID. Students refuse to attend Uvalde Elementary. Surveillance video. Biden's Georgia. The unlikely lawmaker stand against abortion. Like I can't even see Ukraine. I'm going to control F, Ukraine. Literally three things. One is a link up top. One is a video, two videos to the side, two little links. That's it on CNN's front page. Three links, three small links about Ukraine, where it was dominating the whole thing. Yeah, this is
It's wild.
The
definitely
nature
distorted.
cycle. Okay, I have one that we always ask, but I mean, again, no, sorry, we've already asked this to each other. Wait, I have a new one. Sea salt on your chocolate chip cookies.
Ooh, not okay. Dip that into milk. We should. I think we have room for two more. Okay, not okays. Harrison had made a weird face. That's probably not okay.
That okay?
Maybe a little bit. I do like Lay's. Using Lay's, crumbled up Lay's. That's grandma's secret
On what?
in the cookie dough.
Interesting.
Like
Yeah,
salted Lay's?
just regular Lay's.
Yeah, like classic salted.
Yeah,
Mhm.
you should try it. Very good.
Interesting.
Um, okay, not okay. Trading ETH proof of work futures.
I mean, are you a degen? Then it's okay. If you're not a degen, you're just a regular hodler, just stay away. Stay away.
Not okay.
Enough.
All
Um,
right, David, you got the last one.
I'm thinking about the last one. Okay, letting your plants die because you want to travel.
Definitely okay.
Yeah, it's a sacrifice to the gods, to the air mile gods.
Alex
But
is
buy,
the hero we need for the hero we wanted. We deserve.
Davica, you buy a cactus, okay? That thing survives the desert. It'll survive your travels.
Yeah,
Although in my infinite wisdom, I had a bookcase and I'm like, yeah, it's gonna look good. I put a cactus in there. It died. Why? No sunlight. It's like the one thing, dude. I had one job. I just had to get sunlight to the thing. Forget it in water. It was in rocks. It's like it doesn't need anything. I killed it.
Damn.
I'm a little terrified for your two kids now, but
I'm gonna teach them horticulture in the best way possible. Kill the plants.
all right. On that note, I think we're gonna end our Okcoin live listings jam today. Thank you,
Thanks,
Alex.
guys.
Listings.
Thank you, Harrison. And thank you, everybody who listened and tuned in. If you have any questions for us, please feel free to tweet at us or send us emails, or find Alex on the streets of Washington D.C. But otherwise, feel free to find us at on Twitter at Okcoin, or mine is Mittal Devika, I believe. Um, I'm not sure what your other two Twitters are, guys, so you can tell your own.
Mr. EBITDA, earnings before taxes, interest, depreciation, amortization, baby. Mr. EBITDA.
I'm Mr. EBITDA Jr.
I'm feeling
I
left
love
out
it.
now. I think I'm going to change mine to Miss Ibita.
Yes, yes, let's do it. We're gonna be the EBITDA clan.
All right, great, great time, team. I'll see you guys in
Talk
5 minutes
soon.
in our unofficial team call that's not recorded.
Bye, guys.